Coming to you from the beautiful Ringwood Lake, welcome to another Noel Jones Ringwood Market Update.
Well, despite media commentary, we continue to see a very strong market in 2016. April, a clearance rate for Noel Jones of 89% compared to a market average of mid-70s. Looking ahead, we expect the trend to continue for at least into winter. This is largely due to supply and demand in the area. Right now we're seeing a lower volume than last year. That's causing the market to stay at higher levels and keeping the competition very strong. However, what we think will happen is into the springtime, we'll see a lot more homes coming onto the market, therefore giving buyers a little bit more choice and perhaps levelling out prices into the new 2017 market.
One of the more interesting and potentially controversial topics right now is negative gearing. And we thought, being in the real estate industry, it was important for us to provide some unbiased commentary on what both sides of the conversation look like. We actually would love to invite your commentary on whether it actually has an impact on either your decision to vote or, more importantly, your decisions around purchasing or selling real estate. The case against negative gearing is a very simple one. Firstly, the argument is that negative gearing provides an unfair playing field for first home buyers to buy into the property market. The argument being that investors outbid those people at auctions and it's a tax rort for people who are rich. The changes coming involve a grandfathering of covenant arrangements, so if you own a property, nothing changes. But from the 1st of July 2017, negative gearing will only be available on new property. There'll also be a deduction or a halving of capital gains tax on all new properties purchased after the 1st of July. The case for retaining negative gearing is simple, but it's not the main reason for price growth in the last few years. The main reasons are infrastructure, the increase in population, but most importantly, the lack of supply versus the buyer demand in the current market, coupled with low interest rates, is forcing people to pay emotional prices for property, and that's what's driving the prices up. As you can see, it's certainly an emotive argument. We'd love your feedback, and we'd love to give you advice around your property if it's something you're thinking of.
So in today's market, as most people would know, that there's various strategies you can utilise: auction, private sale. Today we're going to talk about sale by fixed date. Michael, what are the advantages for a home seller using that strategy today?
Yeah, so it's really a mix between auction and private sale, and it gets the best of both worlds. So a sale by fixed date has a start and an ending date, so it creates a lot of urgency with the buyers, and it gives a specific end date for the vendor. What we do throughout the campaign is we encourage offers throughout the campaign, and we basically say to the vendor, look, if we get an offer that's well above everyone else that's making offers in that period, then we will look to possibly call all the offers in.
Okay.
So the vendor has the opportunity to sell the property throughout that period. The sale by fixed date is usually a 30-day or 4-week period.
Sounds fantastic. So are there particular properties that are more suitable for a sale by fixed date?
Look, I think first home buyer type homes or investor type homes are generally more suited, but you can use a sale by fixed date throughout the marketplace in any type of home.
And do you think there are specific buyers that would look for properties that are being marketed that way over an auction?
Yeah, I think definitely first home buyers would prefer to buy through this method than through auction, because most of them would like to make their offer subject to finance.
Oh, that's great. Thanks very much, Michael.
Some notable changes affecting foreign investment in 2016 are from the 1st of July, there will be an increase in stamp duty by 7% on top of the existing stamp duty. The banks are changing how they're lending money. Most income from overseas businesses will not be taken into consideration for loan serviceability. It's going to be a lot harder to bring money into Australia. They're capping it at approximately $50,000 per person per year, which is a big change in the legislation there. An application fee for foreign investors to buy a property is $5,000. If the property is over $1 million, it's an additional $5,000 on top of that, and then another $10,000 for every $1 million on from that. So that's a significant amount of money people having to put down just for an application for a loan. If you'd like to know how these changes affect you, give us a call. We'd love to share some more information with you.
Thanks for watching. I hope you found that helpful. If there's anything we can give you a hand with, don't hesitate to give our office a call.